$10,000 max per day. Inside Chase Bank's potential plan for Dinar Exchange 2025. RV News 2025, including an intro for your channel, RV News, written in paragraph format without headings. Welcome back to RV News, your trusted source for the latest and most crucial updates on the Iraqi dinar, the Vietnamese dong, and everything related to the global currency reset. If you're a dinar or dong holder, or just curious about what's unfolding in the world of foreign currency revaluation, you're in the right place. We dig deeper than the headlines, track verified information, and bring you closer to the truth behind what's happening in real time. Today's video is an absolute must-watch. We're exploring a potential plan by Chase Bank that could impact your future exchange process in a major way. Could a $10,000 per day limit be introduced? For dinar exchanges, what does this mean for you and your financial strategy going forward? Buckle up, because we're diving straight into the details behind this developing story in the world of currency revaluation. In recent weeks, rumors and insider tips have been swirling within the dinar community, pointing to a potential operational plan that Chase Bank may implement once the long-awaited Iraqi dinar revaluation becomes public. The most buzzed-about part of this plan, a possible $10,000 per day maximum cap for exchanges. At first glance, this might seem like an unnecessary constraint. But let's break this down. What is the logic behind such a restriction? Where might it come from? And how could it affect the broader dinar exchange process? To understand the context of such a limitation, we need to look at the internal planning mechanisms banks like Chase might employ when preparing for a high-volume currency exchange event. It's no secret that major financial institutions have been quietly gearing up for the possibility of a global revaluation. And when we're talking about the revaluation of the Iraqi dinar, we're not just referring to a slight shift in foreign exchange rates. We're potentially dealing with trillions of dinars being exchanged for billions of US dollars. A financial event of historic proportions. The idea of a $10,000 daily exchange cap makes more sense when viewed through the lens of liquidity control. Banks cannot immediately flood the financial system with billions of newly exchanged dollars without causing some degree of economic ripple. By imposing a manageable daily cap, Chase and other banks may be attempting to slow down the pace of liquidity release to ensure smoother cash flow management, fraud detection, anti-money laundering compliance, and audit tracking. According to sources close to high-level financial networks, there are strong indicators that Chase, like many banks, has created internal protocols to deal with different tiers of exchange clients. These include regular retail customers, VIP or wealth management clients, and so-called whale investors who hold extremely large amounts of IQD or VND for the average dinar holder. The $10,000 per day figure would likely apply to regular exchanges, unless you're flagged as a higher-tier participant with a scheduled appointment. So what happens if you're holding a significant amount of Iraqi dinar, say, 5 million or even 10 million IQD? If the revaluation occurs at a rate of, for example, $3 per IQD, your holdings could be worth between $15 million and $30 million. Under a $10,000 per day exchange limit, it would take you years to convert your entire sum unless you're granted an exemption or moved into a different client category. This is where Chase's tiered structure could come into play, offering larger scheduled exchanges through wealth management branches or off-site redemption centers. But let's step back for a moment and look at what's happening in Iraq itself. In 2025, the economic reforms in Baghdad have picked up tremendous speed. The government, under Prime Minister Sudani, has continued its efforts to stabilize the Iraqi economy, attract foreign investment, and strengthen the dinar's purchasing power. The country's oil revenues have surged, foreign reserves have reached new highs, and the Central Bank of Iraq has made quiet but strategic moves to de-dollarize the local economy. All of these steps indicate preparation for a possible rate adjustment and an eventual integration of the dinar into international markets at a much stronger valuation. Several major US banks have been monitoring these developments very closely. and Chase is reportedly among those with specialized task forces assigned to monitor Iraq's fiscal and monetary indicators. The idea of a structured exchange plan, complete with maximum daily limits, is not far-fetched, especially given that Chase has had historical exposure to foreign currency holdings and institutional clients with IQD positions. Sources suggest that internal memos and training manuals have circulated in selected regional Chase branches over the last few months, instructing employees on how to respond to inquiries about IQD exchanges. While these documents have not been made public, several insiders claim that the language points to an imminent controlled release strategy once the revaluation becomes official. Let's explore what this $10,000 figure might really represent. Is it a hard limit on how much currency can be exchanged? Or is it simply the cap for cash disbursement per day? That's an important distinction. It's possible that Chase will allow larger exchange amounts, say $100,000 or more, but only disperse $10,000 per day into your account or in physical cash, depending on your banking tier. Alternatively, this daily cap could apply to in-branch walk-ins, while larger transactions are handled via scheduled wire transfers or certified checks over time. Another potential reason for such a cap is to prevent bank runs and crowd control. At physical locations, imagine thousands of Dinar holders showing up at Chase branches all across America the day after the revaluation is announced. The bank would need a mechanism to maintain order, track documentation, verify each exchange, and follow up on compliance regulations. The $10,000 daily cap could serve as a soft buffer, allowing the institution to manage flow while protecting both staff and customers from delays or confusion. From a legal perspective, the U.S. Treasury and Federal Reserve would likely support any policy that reduces the risk of overwhelming liquidity shock. Keep in mind that foreign currency exchanges at this scale must comply with strict anti-money laundering, AML, and Know Your Customer KYC rules. Large cash exchanges can raise red flags if not documented properly, and Chase's internal systems will undoubtedly be programmed to log every transaction, confirm source of funds, and require documentation for larger totals. What's important to note is that this plan, if real, does not mean you won't get access to your full exchange value. Rather, it points to a structured payout timeline. Think of it like a phased release. You might exchange your full holdings into your Chase account, but access a portion per day based on banking rules. Higher-tier clients may be granted larger limits or accelerated disbursement depending on account history, credit score, or volume of IQD presented. We've also heard chatter about the possibility of exchange contracts. Certain holders may be presented with the option to sign a structured agreement with Chase, possibly including NDA non-disclosure agreement clauses, tax withholding conditions, or payout schedules. These contracts could come with benefits, like a slightly higher rate in exchange for staggered access to funds, or additional banking services like wealth management consulting. Let's not forget the global context. As more central banks prepare for shifts in the foreign currency landscape, there's a growing sense that coordinated moves are being made behind the scenes. Countries holding dinar reserves, large financial institutions like JP Morgan, HSBC, and Citibank, and even hedge funds have been quietly acquiring positions. Chase Bank, as a major player in the global financial system, would likely align with whatever regulatory framework is imposed by U.S. financial authorities. If Treasury, the Fed, and international bodies like the IMF are involved in orchestrating the revaluation, it's logical that a uniform set of limits and controls would be implemented across all banks, with Chase leading the pilot effort. So what should dinar holders be doing now in preparation? First, open a direct relationship with your local Chase branch if you haven't already. Having an established account gives you a foot in the door and a way to receive updates directly from your branch manager. Second, organize your documentation. Make sure you have proof of purchase for your dinars and scan receipts, certificates of authenticity, and ID documents. You'll likely be asked to verify the source of your dinar holdings to ensure legal compliance. Third, stay informed. Continue watching channels like RV News, join well-vetted forums, and keep your ears open for verified banking intel. Be cautious of misinformation and hype. Many so-called intel providers are pushing unverified dates or rates. Instead, focus on the structural clues. If you begin seeing banks issue training materials, changing internal policy language, or setting up special customer service lines, that's a strong signal that things are moving behind the scenes. Lastly, have a plan. If the $10,000 per day limit is implemented, think about how that aligns with your goals. Will you need to use that money right away for bills, debt, investments, or major purchases? Or are you willing to wait weeks or months to receive the full value of your exchange? Consider speaking with a financial advisor who understands